Does this sound like you? Money comes in from a client, you pay a few expenses, and then you think, okay, but how much of this do I actually need to save for taxes? You've heard numbers like 20%, 25%, 30% thrown around and thought, that feels like a lot, but also I don't want to mess this up. This video is for you. Today, I'm breaking down how much photographers should actually save for taxes using real percentages, income ranges, and examples so you stop guessing and start feeling confident. Hey friends, I'm Heather, a wedding and senior photographer turned tax educator and bookkeeper for photographers. I help creatives understand their money in a way that feels clear, doable, and not scary. And this one I answer every single month. Before we get into numbers, I want you to hear this clearly. There is no one size fits all tax percentage, but there is a smart range. And once you understand why that range exists, everything clicks. The goal is not perfection. The goal is being prepared. So you're going to hear 20 to 30% recommended a lot for photographers. And here's why. That range generally covers federal income tax, self-employment tax, and often state taxes. Self-employment tax alone is about 15.3% of your profit. And then you layer income tax on top of that. So when people are saying save 25%, they're really saying, let's make sure future you isn't stressed. This percentage is based on profit, not total revenue. What's left after expenses is what gets taxed. So let's talk part-time photographers first. This usually looks like photography is not your main income. You may still have a W-2 job, and photography income is supplemental. I recommend your starting range to be at 20 to 25% of profit. Why it may be on the lower end is because W-2 income already has taxes withheld, and you may be in a lower tax bracket. In addition to that, expenses often offset income early on. So, for example, you make $8,000 in profit from photography this year. Saving 20% means setting aside $1,600 total. That's about $133 a month. Way less scary when you break it down. All right, now let's talk about a full-time photographer. This usually means someone that photography is your primary income, no employer withholding taxes, and you're responsible for quarterly payments. The recommendation here is 25 to 30% of your profit. Why this percentage goes up is because self-employment tax applies fully, your income is higher, and your deductions still help but don't erase taxes. So for example, if you're a photographer and you make $60,000 in profit for the year, at 25%, you're setting aside $15,000. That sounds big, but spread monthly, that's $1,250 a month. Planning beats panic every single time. So even though it sounds like a lot, it's better off in the end to have that money set aside. Now, if you're a growing studio, this is where things shift slightly. This often includes higher income, second shooters or contractors, more deductions, but also more complexity. The recommended range is about 30% or more, depending on income and state taxes. Why it can be higher is because you're at a higher tax bracket, you have fewer deductions as a percentage of income, quarterly payments become more important. So this could be someone who's making $120,000 in profit. At 30%, you're setting aside $36,000. At this stage, strategy matters, not just saving blindly. So here's when your numbers might change. You might save less if you had high startup costs. income was inconsistent, you're early in your business, and you might save more if you're highly profitable, you live in a high tax state, your income is growing fast. And this is why checking your numbers monthly matters. Your tax strategy should evolve with your business. And if you're wondering where to categorize expenses so you actually know your real profit, this video is brought to you by my free 15 business tax categories breakdown guide. It shows photographers exactly how to organize expenses so nothing slips through the cracks. You can grab it free using the link below. So my favorite rule, save taxes as income comes in. Two simple options here. Move 25% of every payment into a tax savings account or automate transfers weekly or monthly. The key is removing emotion. That money isn't yours to spend, it's future yours responsibility. So let's recap. 20 to 30% is common because it covers real tax obligations. Part-time photographers often start lower, full-time photographers usually land in the middle, and growing studios plan for that higher percentage. Now, the big thing to remember is profit is what matters, not revenue. And saving for taxes isn't about fear, it's about freedom. So tell me in the comments, which category are you in right now? Part-time, full-time, or growing studio? And don't forget to download the free 15 business tax categories breakdown guide linked below. It's the foundation for knowing what your real numbers actually are. If this helped, hit like, subscribe, and I'll see you next week with more practical tax and money guidance for photographers. You are not bad with money. You're just building your systems, and that's powerful. All right, guys, I'll see you next week. Bye.